Welcome everybody at the interview of the Lightman report on savings, past, present and future. A very interesting subject these days as the banks hardly give you anything for them giving your money and holding your dollars and your euros. So what are you going to do? Are you going to flee to the stock market? Are you going to buy property? What are you going to do with your money when it only becomes less? So we see a lot of historic facts in your report, Alex. It's a lot of development. I think that crypto already gives a higher level of service in transactions right now. I mean, a transaction takes like a second. There's no bank in regular fiat trading or Forex that can put that on the market. So what would you consider points for a consumer to watch for in this new area?
Eric? Are you addressing that to Eric or to me?
Yeah, well, Eric, you can go first. What do you see consumers looking for? What should they be looking for?
I think more of investors. So I mean, consumers, they need to spend more money because you're because the bank is printing more. So if you don't spend now, then your purchasing power is gonna decrease. So for consumers, advice is spend your money. Well, for investors, it's kind of shaky on the fiat front because again, the government keep printing fiat money. You have more and more U.S. dollars or any other government print backed notes. So, what kind of asset do you want to invest into? I think in the Alex Lightman report, Alex said it well. If you pack with S&P 500, you're gonna be doing very well. But if you do Bitcoin, it will be even greater, right? Bitcoin probably is the best investment instrument ever for the past 10 years. And what I believe is if you're an investor, now you have an even better opportunity because nowadays, not only Bitcoin, you're gonna have a basket of different crypto assets, or we can call it digital assets to invest into. There will be Bitcoin like a digital currency, and there will be like stock like STO type of digital assets, and they also will have NFT like digital art. So to me, if you're investor looking for alternative investment, actually I don't want to say alternative investment. I think you should put more money than before into the crypto asset. That's how I see it. Annemieke.
Alex, if you listen to what Eric's got to say on, I already thought an interesting point. You said consumers, no consumers spend. We're talking investors. I think it's one of the first points that's different. The banks, the regular banks that take your dollars and your euros into a savings account, see you as a consumer and not as an investor, unless you maybe bring heaps of money and go into the funds that they fill with all sorts of assets. That's already a major difference. I think that we see people go into crypto assets or digital assets rather as an investor. So Alex, what do you think that investors should look for when they try to create a better portfolio with going into digital assets?
Well, let me say up front, Annemieke, thank you for the idea of the structure of the past, present, and future of savings. And the next 3 Lightman reports are all based on your structure. And I've gotten good compliments for it. So thank you for that. I really appreciate it. And well, the first thing I think of is the fact that they're in a world that's supposedly capitalist, half the people in the world don't have bank accounts, where the world is seriously underbanked. And because bank accounts are sometimes identity and they're the basis of getting loans for getting houses, getting vehicles, which some people need for their jobs. I think that this is a problem. And then if you look at the banks, you go, well, why aren't you doing more for that? And the banks will tell you, if you push them, that they have to pay $200 per person for the cost of regulating, just dealing with compliance before they ever make a penny on someone. So they frankly don't want small customers. So banks are just fine, even though they get money from the public all the time, like they've been hogs at the trough with the money, the supposedly COVID money. and they don't really need it. They're not suffering like other people because you can do online banking. You don't have to go into a branch. And I think that we've seen, as Eric said, that Bitcoin is a wonderful investment. So sort of the first advantage of crypto over all other assets is capital gains. It could grow faster at the underlying value. The original price for Bitcoin when Hal Finney was starting to play with it was so in 2009, the price of Bitcoin was $1,300 to $1, which is the number of World of Warcraft gold to the dollar. When I looked at it, it's basically game money. And then when that went to $8,000, that's 100 million% return. So that's a pretty big thing. So that's the first advantage. And then the next advantage is to be able to wire something. There are people who have wired $1 billion worth of crypto and paid a $30 or so, give or take $10 fee. That's amazing. Now, some people have paid for a cup of coffee or a pizza with a $30 fee. Bitcoin is like Rain Man in the movie Rain Man, played by Dustin Hoffman, when his supposed brother, played by Tom Cruise, said, "How much is that candy bar?" "About $100. "How much is that car?" "About $100. So with Bitcoin, it doesn't, and other things, they just have their fee and they don't care what the amount is. That's pretty interesting for people who want to move big money, and they also want to move it fast without any intermediary holding on to it to kite the funds, to basically, use the funds and loan them out longer and stuff. Getting rid of intermediaries is a wonderful thing. So that's the second advantage. Now, in 2020, we come up upon the third big advantage of crypto, which is vastly higher rates of interest and passive income. So as we were starting this conversation in our warm-up between the three of us before we started recording, we were talking about what's passive income. And so crypto has two main sources of passive income. And passive income would be not counting the increase of the underlying asset. So let's just say that the ETH or BTC or DNA or anything is staying at the same price. What's the value on that? Well, one is that there are people who will loan you money for that. I mean, they will pay you an interest rate. And so you can get as much as 25% interest, passive income. And the second big source of passive income is airdrops. And so airdrops are regulated different places. You have to check with the specific laws and regulations, but you can get a double win of passive income if you get a high rate of interest. And there are many people who have their money at negative rates of interest. In other words, you keep your money there and they're taking out money away from it. And you go back in a year and you have less money than you put into it to begin with. Well, imagine that you could have a 25% interest rate. That builds up pretty quickly. I mean, that's something where you double your money if you could keep it every 2.5 years. The rule is 70 divided by that number. So let's say 3 years or so, you'd have more than doubled your money. And then if you have airdrops, and there are some cryptocurrencies that give you daily airdrops, that's a big passive income, and that can give you 50 or more % return. And then if you add in a little bit of capital gains on that, which is probable because we're going to be seeing the whole crypto sector going from being between 200 and 300 billion to, I think, in this decade, between somewhere in the area of 10 trillion. So there's going to be a rising tide lifting all boats from that. That's quite a good value proposition.
If you talk about the growth, which is enormous, but if exponential looking to the past again, exponentially, it's quite reasonable. Eric, how do you see it that we can have fast adoption of that mainstream? I would say getting digital assets and getting more out of your money, basically, or your assets than you would get in a traditional way. How do we move to fast adoption?
Well, I think better products a little advertisement. I think DNA is a better product than Bitcoin if you talk about digital currency or digital assets. So I got a few compliments past few weeks that people download our Metaverse Light wallet and they transfer tokens, DNA tokens, and it arrived to the counterparty in seconds. And they said, wow, I can get money in seconds. And it doesn't matter you're in Russia and I'm in the United States. It's just amazing. I say, yeah, sure. Now you talk about DNA. Think about if we have digital US dollar, or say USDT or some other stable coin, right? So you can easily transfer value, or even digital art, like in seconds. So a better product will trigger vast adoption. And people think the Light wallet is really good to use, right? So
I think you had already a valid point. It needs to be fast. We're not used to waiting anymore in today's society. Everything needs to be fast. You know, the span of patience is reduced over the digital developments that we've seen over the last 30 years. So it's only logical that we demand instant service. Like we want instant packages when we order online. We want everything now in the minute.
exactly. And the other thing, I think Alex just mentioned that if you have a large amount of money wants to transfer, digital currency is a good way. But on the flip side, if you have a small amount, let's say I just want to wire you like 70 cents, but you go to bank for 70 cents, a bank draft costs you $7. You know,
Banks are.
you might spend, yeah, you might well spend like $7 for a transaction fee just to wire 70 cents. Then you stop doing it. That's a transaction that lost. So if you adopt a digital way of doing things, blockchain way of doing things, then you can send out like vast amount of transactions. Like say I want to send to 100 people. Let's say I want to airdrop to my community 70 cents each. I can send to 1,000 people in a second, and with very minimal cost.
You mentioned there another point that I see in recent months, that people go from fiat into something like DNA or ETP coin in Metaverse. They transfer it to the wallet on the other side of the world, and that person will go on an exchange and makes fiat out of it again, which is way cheaper as sending the fiat from one end to the world of the other, because they charge you $50 for that. No matter what the amount is, the cheapest rate that I see in that is like 15 euros for a transfer. And as it goes above a certain amount, it takes a percentage. So it's even cheaper to take two fees at the front and the back end in going into crypto and going out of it, because maybe you need to pay the rent in local fiat currency. I mean, that's not changed yet. I think as soon as people discover this, a lot of the international traffic will go over this way. First of all, because the money's there instantly. And most crypto to cash organizations who go to fiat will do it in the same day. So it makes it not even faster. Even with that hop in between, it's already cheaper than a fiat transaction in a bank account. So you see a lot of developments in there. You mentioned a very interesting point there, Eric, in the passive income creation, and that's stablecoins. I can imagine if I'm an investor or I have like assets I don't need to use for food or for housing or that sort of thing, that I want a little bit more of, well, staying away from the volatility that's still, Bitcoin has no regulatory things like a Ministry of Finance or a government that says I'm going to manually twist the whole situation. It's as the market is. It's completely honest and transparent. So I can imagine that there are some people who say, I would rather have a little less passive income and go towards the direction of a stablecoin. How do you see the future of those stablecoins?
I like stablecoin because arguably Bitcoin was the best performing asset class for the past 10 years. But there's no guarantee that it will continue the way, although I strongly believe that. But a lot of people, they probably will stop playing, what's the word, capital gain on Bitcoin. They say, I don't want capital gain on Bitcoin anymore. I'd rather have passive income, meaning give me 1% every month, so maybe 10% every year. So any income, this is the passive income kind of. It's interesting that in Chinese language, the word for taxation and sleep sound the same. So yes, the sound is the same. So basically, people say after tax income or say after sleep income. They sound the same thing. So passive income is after sleep income. So you can go to sleep and your money still make money for you. I think that's a better definition. Actually, Chinese people are really smart on this one. So passive income is after sleep income.
After sleep income.
So some investors don't want to play on the capital gain part of they can play on passive income.
I think, for a lot of very regular situations, like, wanting to send your kids to university, wanting all sorts of things that you do want to make money on it, but you don't want to run in a lot of risk by just betting on capital gain. Alex, what's your view on that situation? Like, the difference that Eric just pointed out is like, no, rather to go for the more risky situation of capital gain versus the situation of passive income and the role of stablecoin in that.
Well, stablecoins have proven to be shockingly liquid. So it's been the case for quite a while that Tether had greater trading volume than Bitcoin, even though Bitcoin is much better known. And also even ETH, I saw something recently that said that ETH had 400 times the volume of Bitcoin. So the more stable the price, the more it can be adopted for remittances, for transactions, and so on. There's a saying, an old saying that many people haven't heard. Basically, there's nobody ever got fired for buying IBM. And so if let's say that you're in charge of doing stuff for Starbucks or some chain or McDonald's, and you recommend Bitcoin, and Bitcoin goes to $20,000, and then it goes down to $3,000, you can have 1/4 of looking like a moron, and that's enough to get you fired. So the whole thing is nobody gets fired for using stable coins as the basis for payment, and they would get fired for things that are very, very volatile. So, there has been a reduction of volatility over time, but in general with crypto, you want to have it be because of the advantages of crypto. You want the advantages of crypto, of ease of payments between mobile phones and possibly getting interest on your money, but you don't want the disadvantage of volatility. And so basically stable coins are the advantage of crypto without the disadvantage of volatility, while still having this kind of idea of sector independence or being not correlative assets. So whatever would knock down the S&P 500 or whatever would knock down the dollar, you don't want it to also knock down crypto. So if you keep a portion of your money in crypto and it's stable coins, that's more likely to have greater volume. And then over time, you'll hold on to your gains, because in general, people hate their losses more than they enjoy their gains. They just don't want to lose money, and stable coins help with that. And so if you're having savings, the idea of savings, like the first rule of Fight Club is don't talk about Fight Club. The first rule of savings is don't lose money. And so stable coins, are better for that.
I think a very valid point to close it off. Eric, I would like you as a close-up to respond to: savings are not meant to be a loss. At the moment, in fiat currencies, they are. So to close it off, what would you say to that statement?
Well, again, if you're a consumer, then spend your money. If you're an investor, so because your purchase value is gonna go down, and if you're an investor, the investor smart. And think about, do you want to play the upside of your asset, or do you want a passive income just generate after you sleep? Okay.
I want to thank you both for this very good interview on savings. I think once we go into the world of stablecoins with the Metaverse DNA project or some of the other developments that are coming on in the market, we definitely return to the subject. I want to thank you both. That was really a great time we had over this subject. Thank you very much.
Thank you, Annemieke. Thank you, Eric.